Good morning, everyone. It is Monday, April 29th, 6 a.m., half an hour before the market opens, and we're looking forward to an amazing and profitable week. So last week we ended with the market bouncing from its MA90 up. It did hit above its EMA 20 a little bit, and it looks like the higher probability is that it will hit its MA 50, and then we'll see from there. But as of right now, the higher probability is to retrace back down at least to the MA90, perhaps to a -10 correction. But this market has been kind of strong, right? It's been stronger than we've been expecting all throughout for almost a year now. So there is a chance that it could continue to move higher and reach the all-time highs again. From there, it is extremely unlikely to break the all-time highs. That would be extremely strong, but it's not impossible. So we want to take into account the fact that this upward motion was so strong. Normally, when we get this 25 to 30% motion upwards, we do need a deeper correction though before it can move higher. So the higher probability event is still that we come back down even further, but depending on what the market stimuli are, what the catalysts are, it is possible that we could go up there. Now, what are the probabilities? What's the possibility? At this particular moment in time, I would call that maybe 10% for us to hit that all-time high and continue higher. The higher probability event, 90%, is that we hit this MA50 and then start moving, or I'm sorry, 90% would be that we hit either the MA50 or the all-time high and then come back down. So right now we're just going to see, will it hit that MA50? And if it does, will it continue higher? So let's see how our futures are doing so we can see what today sort of looks like. Okay, so mostly random up. So slight upward bias, but mostly random. We've got the S&P, see 14 out of, so about quarter, 25 basis points. And then we've got maybe actually a little more than that, maybe closer to 30 basis points. NASDAQ, we've got at about 40 to 45 basis points. Dow, we've got at 16 basis points. So random, and NASDAQ a little above random. Normally, we would call that a little above random, but in the past week, we've seen these big movements in the futures markets that ended up reversing. So a couple of days they did continue moving forward. So for today, or for the current environment that we're in, I'm going to treat that NASDAQ movement as random. So upward bias, but not significantly so. If we go over and look at how our pre-market has traded, yeah, you can see that, oh yeah, it floated up, but not that much. It's basically just in between these two lines. It just floated up to this higher line on the SPY. That is a reasonably critical level though at the 510. So what we'll want to see is that the S&P 500 at the open actually breaks definitively above that 510, heads towards that 512 number, and then we'll see if that gets defended or if it rejects. It could, of course, come down back towards the 508.50 and then bounce around or move higher. Now, normally 70% chance that we move down towards the previous close, especially on days where it's random movement. If we were significantly up, then that changes the statistics a little bit, but we're not. We're just a random amount up. So statistically, we're going to expect that this actually trades down, probably towards the 508.50, but it could just be the VWAP and then bounce. That's a higher probability of that. And same with the NASDAQ, although we're in between levels on the NASDAQ. Okay, so actually, since it's the beginning of the week, we should really look at the major earnings reports and the economic reports that are going to come out. So, is this the right week? No, not the right week. Yeah, okay. So today, nothing really. Tomorrow, consumer confidence. That's going to be very important given the extremely low GDP print that we got last week. So this could be market moving, especially if confidence is way down. Wednesday, we've got FOMC announcement. That's going to be the major report, and then the press conference off afterwards. Now, the market has pretty much priced in that he's not going to do, or the Fed isn't going to do anything. So if they do nothing, then that's the expected event. I think when we looked over the weekend, it was over 97%. So that won't move the market too much. It'll introduce some volatility, but it wouldn't really move the markets. If there's a surprise cut or a surprise raise, then that will definitely move the market. It's just like Powell talks so much and he likes to project so far into the future that he sort of puts himself in a bad place when he actually needs to take action. So actually right now, the appropriate action would be to raise rates because the inflation numbers that we've been getting have been terrible on all the recent reports. The normal Fed action would be raise rates, but he's opened his mouth so much and he said so much that he's going to cut. And the market has been expecting that we're going to cut. And then Biden jumped in and said, we're going to cut. And so it's going to make it very difficult for him to do the things that he needs to do when he needs to do them. The same thing happened when he said that inflation was transitory. And he insisted and he insisted and he insisted and he insisted for 2 years. And then finally he goes, okay, I can't keep doing it. I have to take action now. I have to start raising rates in order to cut inflation. And then he had the biggest ever raise in history. It went to the single time raise. I think it was 50 or 75 basis points. The Fed had never done that before because he needed to play catch up. So right now, the inflation is moving higher and the appropriate action is to raise. Right now, he's kind of stuck because of what he said to hold it steady. And we may see this narrative start changing over time that, hey, we need to raise rates. And that's going to be really, really harmful to the markets if he does that. Just like when he cut rates, raised rates the first time with inflation, we went on a 1 year downtrend. So we're going to watch carefully to see if there's any language changes in the press conference. That's going to be very, very important. If they don't change the rates, but he starts saying things like, we need to hold for longer. We may even consider a rate hike because of the data. We need to be data driven and the data is telling us this. Then that could send markets for a spiral downwards. So what he says is actually going to be far more important than what they do with the rates at this particular conference. That's usually the case, but especially so this time. Thursday, nothing that important. And the Friday employment situation is always watched very carefully. Okay. Let's look at our stocks this week. Sorted by market cap, we've got Apple. That's going to be really important. That's on, what is that, Thursday? Amazon, also going to be very important. That is tomorrow, aftermarket. Eli Lilly, very large cap pharmaceutical company, MasterCard, Coca-Cola, AMD, McDonald's, Qualcomm, ConocoPhillips, Amgen, Pfizer, we got some really big players in their sectors reporting this week. So we're probably in for a volatile week. And on days where we normally pause, for example, before the FOMC announcement, we normally pause. So Tuesday, we normally expect a pause. But if there's a lot of these guys, what day is Tuesday and Wednesday? Tuesday is the 30th and Wednesday is the 1st. So if I see any May 1st before markets, so Pfizer, and the 30th after markets, Amazon, okay, AMD. So we're probably not going to get too much of a quiet period this week. So the earnings announcements are going to keep things moving and volatile when we would normally expect things to go quiet right before some of these major news events. So we'll want to watch that very carefully. If earnings have been pretty mixed so far, and there have been a lot of weird movements where the companies do amazing and then they get destroyed after earnings, and other companies who do terrible and the company does amazing. So one example is Tesla. Tesla, terrible earnings, huge misses, surprise misses, and then we have this gap up, trades even higher, sideways movement, and then today, pre-market, look how high it is up here. So this is definitely not something you want to chase into. This is counter trend, and at some point we're going to hit enough resistance, or the people here are going to be like, wow, we made so much money, look how lucky we are. They're going to be taking those profits. So this is definitely not something that we want to chase into. Okay. Let's take a look at our, well, if we look at the S&P, we went over this in the weekly market review. The higher probability event is that we stall out at this MA50. And that's what we're going to be looking for today, because there is potential for us to reach that MA50 today. If we don't, perhaps sometime this week, unless we just get such huge negative sentiment. I mean, we have some very large news items coming out. We have some very large earnings coming out. So it is possible that actually we don't hit that MA50 and we just move downward from this MA20. We are sitting right at the MA20 as of the close on Friday. Looks like we're going to open at the high of Friday. Just like Friday traded back down, it's possible that today we have a red bar and we trade downwards and we start to head towards this 500 level again, which is near the MA90 and near this, basically the horizontal psychological support. And then if we break that, then we could go right downwards. So we don't have to bounce off of the MA50. We could bounce off of this EMA20, but chances are slightly higher probability, I would call it around 60%, maybe 65%, that we will move down either from this EMA20 or MA50. And either way, it's probably going to happen sometime this week, probably by Wednesday, since we have that FOMC conference on Wednesday. So unless they do something really out of left field, like, hey, we're going to cut rates even though inflation is up, then we should have that downward movement. If they do something weird and crazy, then of course that could send it even higher. So right now, in terms of timing and positioning, you don't really want to go super long, because we have the EMA20 resistance, we have the MA50 resistance, we have the consumer sentiment coming out, and we had that negative GDP print. So chances are sentiment isn't going to be amazing. We have the FOMC, which has been saying pause, even though the market has been hearing, because before the Fed has been saying cut. And so the market is expecting cuts, even though the Fed has been working really hard to curb that enthusiasm. The market has been over exuberant, and so the either they have stronger messaging saying that we're going to pause, or they may even start to give clues that they're going to raise, in which case that would all be downward motion catalysts. So unless earnings are super amazing, the news catalysts and the technical levels and the probabilities are towards the downside. So there has to be quite a bit happening in order for us to move. More has to happen for us to move up than it has to happen for us to move down. We'll put it that way. So in terms of positioning, you want to see hit that MA50, confirmation to the downside, start looking for shorts. Or today, we have a definitive move to the downside because we're reacting to that EMA 20, and then start looking for short opportunities. Today is more of a probing day for institutions, and that's what we should be doing as well as retail traders. We shouldn't be jumping all in. Hey, it's Monday. I've got, I'm over the weekend. I don't have weekend risk anymore. Let me put on all. So normally Mondays are rebalancing for professionals. There does be a tendency to be down during the mornings and then start to put on new positions in the afternoons for institutional traders. But this week in particular, because we have so many earnings and so many news items, and we are nearing critical levels in the markets, they're going to be probing, which means they're not going to be going in big size. They're going to test. They're going to go in. If I have $10 million to put to work in a particular name, I'm going to be putting 100,000, 300,000, 500,000, and I'm going to see how the market reacts. I put in 300,000. Oh, we went higher. Okay, great. I'll put in another 300,000. What happens? Oh, well, now it's chopping sideways. It got completely absorbed. What about another 300,000? Got completely absorbed. Okay. Oh, now I'm going to pause and wait, because if it keeps getting absorbed, then that means there's a lot of sellers right there. A lot of sellers at that level. So we instead of probing, because our cash it might be limited unless I have a larger account. I'm trading my own personal money that's a couple $1,000,000 or at least several $100,000. We don't take the probing approach. We take the wait and see what happens approach. We watch the institutions probe and we see the results of their probe instead of trying to probe with our own money. So today is more of a wait and see. If we're confident in our current positions, we can just hang on to them. But we really want to see what direction this market goes. Do we move higher, hit that 512? Do we break beyond the 512? Do we move lower to the 508.50? Do we break below all the way to 505? Okay, so 505 would be near the EMA 8. So actually, we would want to see if it breaks even further below the 505 to more towards the 500 level. And the MA50 here is at the 511. So that 510 area, 511 area is going to be critical. And then we said 512, and then does it break above the 512? And in terms of day trading or day trade levels, day-to-day levels, that 514.72, which we just call that the 515 region. 515 would be up here, which is basically it would send us into our box that we had before. Okay, so we want to watch that very carefully today. Today is very important probing and watching to see how the market reacts kind of day. Okay. I think that is it. I mean, if we're just going to be, for the most part, watching and see what happens, then there's really nothing else to. Basically, we're going to draw our conclusions in the aftermarket session, if any, because if all it does is chop around sideways, then we basically have to wait and see again tomorrow. Yeah. So that's our game plan for the most part. For me, my game plan at least, I'm going to be watching to see what the market does and what that tells me. And so for the most part, uh, hopefully, unless if we don't just chop sideways, then we'll have a lot more to see and think about in the aftermarket session. Okay, guys, 10 minutes till open. So we'll get ready and I will see you in the aftermarket.